Hi everyone, I'm Ken from Crypto Trading KS. If you're new, a very warm welcome and welcome back CTKS family. Here you'll learn how to become fearless inside financial markets to assist you to become more of a financial and emotional blessing to yourself and those you love. If you like the content, please subscribe to the channel and don't forget to smash that like button. All the indicators that I use on the daily video come from the service inside CTKSmethod.org. Let's run the numbers. In this video, we're going to do an introduction to SLs. Let's just pop on the indicator so that we can see. I'm going to introduce you to the concept of fresh air gaps. That's where price moves up very, very quickly. Resistance levels from a structural perspective and ceilings inside the market where price reverses back from. I'm going to explain why it's so vitally important to keep your eye on Bitcoin. As well as the S&P 500, I'll talk about directional correlation, why it's so incredibly important to understand. We'll also talk about the role of percentages. I'll help you to think in terms of percentages because when you do so, you'll see things that you just didn't ever see before. It will be incredible. Let's run the numbers. When looking at price action, and we're going to look at the daily chart on Solana, one thing that you will always see is different people use a logarithmic scale as opposed to an arithmetic scale. It's very easy to see an arithmetic scale, especially in crypto, because it exponentially explodes and implodes. This is normal. This is what crypto does. The problem is this: when you're looking at Solana all the way down here, a certain price movement, say a dollar movement, is very significant down here. At the moment, it's really not significant at all. That means that we need to look through the lens of statistical significance. How do we do that? By turning on logarithmic scale. Logarithmic scale is vitally important to action on all of your charts. If you don't do so, you'll not understand what investors and traders are all about. That's literally return on investment. That's simple. Return on investment is always a percentage. The next thing that we need to do is to mark up all of price history. Solana has been trading for 1,235 days. If we just look into this recent price right here, we're only getting a very small slice of price action in terms of support and resistance levels. That's about akin to just looking at an arithmetic chart. And if you look at an arithmetic chart, which is a non-log chart, you cannot make statistically significant decisions based on this. You need equal percentages. That's what logarithmic is. It's really, really simple. It's just an equal percentage difference between two different levels. As an investor or a trader, and all investors become traders, and some traders are investors as well, what you're after is a specified percent return. The next thing that we need to do is to look at support and resistance levels. They're vitally important to understand. Typically, what people do, they'll just zoom into recent price action and say something like this: oh, there's a resistance level there, and this is support, and this is the most important line, and when this line gets taken out, X, Y, and Z will happen. Unfortunately, that's not actually the truth. Of course, it's important, but it's not the entire story. It's like conducting a survey of 1,235 people and just picking out a very limited sample size. How limited could that sample size be? Say it's about 47 people. So 47 people out of 1,235. That unfortunately is 3.8% of the population. That's really low. When people conduct a sample, and this is something that I used to teach in first and second year statistics, sampling theory is all about getting a representative sample. This price action is not necessarily representative of Solana's price action. You can see we've got downward. If we were doing our price action based on this, we would just assume it must keep on going down, even if we did it here and then it reverses. What about over here? It's going up, but then it's going down. You've got to look at the entire picture to get a census of price, not a sample. To create a census on price analysis requires a scientific process called the CTKS method, and it requires Level 1 standard certification and Level 2. Level 1 standard certification are the basics, the fundamentals that you need to know. The rubber hits the road in Level 2 standard certification, which is where you use your knowledge from Level 1 to understand how to mark up these SLs. And you can see it does require a bit of effort, but it's very important to understand. You're putting your hard-earned money on the line. You should get every edge that you can possibly get. I have some fantastic news about Level 1 and Level 2 standard certification. I have a very special gift for people who have not done the masterclass. It's a near total scholarship for both Level 1 and Level 2 CTKS method standard certification. This will allow you to draw the SL lines up on any price chart. And because it's a lifelong skill, you learn it once and apply it for a lifetime. It's awesome. To be eligible for this very, very special thing, you just need to subscribe and watch 3+ videos before episode 1000. Find one rule from each video and get the URL and timestamp of that rule, and of course the text as well. And then message me directly on X/Twitter with your 3+ rules and 3+ time URL stamped links. That's it. That's all you need to do. You still have time, but not much. This incredible near total scholarship will end midnight New Year's Eve. So, Happy New Year if you get that, and please let your friends know if you think that it can help them, because it will. That's what the CTKS method does. It marks up all of price history with a standards-based methodology. Remember before that I was talking about somebody could say, oh, there's a resistance level there and there's a support level there. If you actually go back in terms of history, these support and resistance levels aren't realistically that significant. We can't just focus on recent indicative price. Of course, that's where price is right now. We have to pay a lot of attention to it, but we need to analyze it by the past into the future. And that's exactly what this indicator does. I'm just going to zoom in there and I'll show you what I mean. Now that we've zoomed in a little bit more, somebody could say, this is a resistance level just here because it marries up with this. What about this? Where would this support level be? Or is it resistance? Or is it support? One thing that you'll see quite often is support turning into resistance and turning back to support. This is normal. This is exactly the reason why we don't care about tops and bottoms. For one thing, a top becomes a bottom and a bottom becomes a top all the time, and so the cycle just continues. I'm just going to color these two specific lines, just a different color so that you can see them. Let's just make this one yellow and this one yellow so that we can just see them. If they're any different from all of price history, let's turn on the indicator and see if we've got any confluence. You can see that from a structural perspective, which means all of price history, we're not seeing any resistance or support levels where those yellow lines are drawn. They are literally fantasy lines. When it comes to analyzing price history, what we're seeking to do is to create statistically significant lines of resistance and support. You can see up here that Solana was trying to get above this 123.02 mark. It couldn't get through it. It came down from this resistance down to support but couldn't hold it. It needed to go down lower. And this is something that's really, really interesting. A lot of people think that there's only one or two support or resistance levels inside the market. This is absolutely incorrect. There's not only multiple support and resistance levels, they're of different weights and thicknesses and strengths as well. Also, when they tend to combine, that creates a stronger amount of, this case, support. What is support? It's one of these horizontal lines called an SL or Stanfield level. And this particular line is a structural support line. When you get a grouping of structural supports, it makes it stronger. One thing that we're always aware of, very, very aware of, is the dreaded fresh air gap. They can be dreaded to the upside or to the downside, depending on if you're shorting or longing in the market. A fresh air gap means the price can move up between a support level to the resistance level. We can see it here on Solana. It literally filled those two fresh air gaps, and this is on the daily basis. So what we're seeing is it took one day to fill that fresh air gap, another day to fill that fresh air gap. Then what happened? A lot of resistance. You can see it was just pushed down because there's so many sellers there, and a lot of volatility on that day, trying to grind through all of these sellers. These sellers are strong, which means even if you've got a lot of upward momentum, those sellers start to weigh, and we can see Solana has been coming back recently. There are two types of indicators in mathematics and also management science. And in mathematics, especially inside financial markets, you have lagging indicators and you have leading indicators. Leading indicators can tell you, especially on a price chart, where price is likely to go. For example, if we were looking at Solana right here, we were looking at it right now and saying, we've got some fresh air gaps. We're starting to just try to overtake this resistance level. If we get above there, there's the potential to move up to this 81.68 mark. And because there's fresh air, and up to this particular area, which is 94.04. And what did we see happen with Solana? We saw that is exactly what happened. These fresh air gaps, if it breaks above structural resistance, and that's a key thing, if it gets a cut over, this kind of price action is very common. When you got a lot of resistance, a lot of sellers entering the market, and this is what it means. When price is coming up to this structural resistance, there's so many sellers inside the market, they want to push the price down. That doesn't mean they can't get overcome and liquidated to the short side, but they will regain control and seek to push the price down. The exact thing happens on the opposite side. When you have a lot of structural support, especially heavier structural support, it means that even if you have a negative fresh air gap, this is a positive fresh air gap. If you have a negative fresh air gap, we should be caught around this particular area from 73.33 down to 68.53. This is an area of structural support. If we turn off the indicator and just look at the naked price chart like this, we say, where's the support? Where's the resistance? You just don't know because you can't see it, because it's not there. That's what the purpose of these structural indicators are. With Solana, we can see that we've got a certain amount of structural support just in this area of price. One thing to just take a lot of attention and notice too is everything inside financial markets is intercorrelated and interconnected. Not only that, there is rotation. Intercorrelation and interdependence means that as the dollar was decaying, the DXY was just spiking down. The US 2-year yield and the US 10-year yield were going down. Junk bonds were coming up, and the VIX was going down. This sparks so much positive momentum inside the markets, all of them. The crypto market is not decorrelated from the stock market. If you think about it, the entire crypto market is worth about half of the value of Apple Computer right now, Apple Inc. Crypto at the moment is literally tiny. That's why we need to know where the structural resistance and structural support levels are, because they act as guide rails. And when we identify price like this, where we have positive fresh air gaps and negative fresh air gaps, we can see in these areas, price can move very, very quickly, either to the downside or to the upside. The indicator will tell you where those gaps are so that you don't have to guess. It's much more important to know you are in an exponential market, which is crypto. The other thing that I spoke about was rotation. Solana has been going gangbusters. It's just been going up and up and up and up. And we predicted this quite a long time ago. The thing with Solana, it's come up so far, so fast that a natural amount of congestion is expected. A lot of people will be saying, wow, Solana's gone up so much. It's time to rotate the money out towards cryptos that haven't gone up as much. And this is what you see happening all the time. Rotation is a real thing. We call it changing of the guards. It's also really important to understand that all charts are intercorrelated and interconnected. What is this blue line here? It's the ES1. What the heck is the ES1? I'm glad you asked. It's the E-mini S&P 500 futures. So what's the blue line? It's the current value of the S&P 500 futures. We need to use the futures because the main market is really lazy. It's not like crypto. It doesn't work 24/7. Futures are the closest that we get. Now, why am I looking at Bitcoin compared to the S&P 500? Do you notice this big push down in the S&P 500? What happened to Bitcoin then? Oh, it came down. What about this negative momentum inside the main market indice, the big one, the one that controls them all, the S&P 500? Well, that came down and crypto came down. That's kind of interesting. What about here when it was going up? We could see, like in past, the Bitcoin price momentum actually peaked before the stock market peaked. That's a pretty interesting thing. And again, it did it here. It peaked over here. It did an earlier one and then a secondary one. Why did this happen? Because basically China went offline during this time and everybody thought the Bitcoin ecosystem would crash around 21. And guess what? It didn't. But you can see something really interesting. If we zoom in like this, wow, there's quite a degree of correlation. But you say, Ken, what about this? Bitcoin went down and the stock market went up. Yes, that's because some really naughty players in the crypto market got sent to jail and didn't pass go and definitely didn't collect 200. You'll see this all the time when it comes to intercorrelations between charts. Intercorrelations mean they roughly follow. That doesn't mean that they have to overlay 100%. That's just not what is required. But the concept here, Bitcoin is responsible for the movement of the alts like Solana and ADA and Litecoin and Bitcoin Cash and everything else. Doge, you name it. What happens when we overlay Solana on this chart? We can see some pretty interesting things. We can see Solana did a really good job of taking off. It's basically following Bitcoin's gravitational pull. We call this correlation directional correlation. I'm just going to remove the S&P 500 futures because it's going to be a little bit easier to see. One thing that we can see, directional correlation, is how the market moves. What we see right now, Solana was coming up as Bitcoin was coming down. And this is the thing with directional correlation. It's not 100% overlay, but it's not too bad. It gives you a bit of an idea as to what could be happening. You can see that in the vast majority of cases, Solana was indeed following Bitcoin's gravitational pull. Remember, these two scales are on log. Sometimes it's more pronounced than at other times. Sometimes things will go out of whack with each other, but over the long run, you'll see it follows very, very closely. There's a good illustration. These are called flush out events. When you have a big candle down, the system tends to get flushed out and everything tends to come back into harmony. I've seen this countless times over the decades inside financial markets. What you will also see, after a certain amount of time, things will go out of whack again. They'll follow fairly closely, and then they'll start to depart. This is because confidence, exuberance comes back into the market, and things get overextended. Don't forget, Bitcoin is a very, very big asset class. And when it's compared to Solana, Solana is quite tiny comparatively. Everything is tiny comparative to Bitcoin. How much tinier is Solana in accordance to Bitcoin? Well, it's considerably. What we can see when we look at the market cap of Bitcoin and do that relative to Solana, Bitcoin is about 18.7 times the size of Solana. That's big. This also means that Solana can move more in terms of relative percent and just keep it's normal. If you think about a major big cap like Apple moving up 10% would be $300 billion of market cap because it's a $3 trillion company. But if you had a company with a market cap of 30 million, 3 million in additional market cap is not that difficult. Returning to Bitcoin, now you know the very important thing that Bitcoin represents to the alts. It's the direction. The alts are much smaller than Bitcoin. That means they will move in orders of magnitude more or less than Bitcoin. We would not expect the alts to move the same percentage as Bitcoin. That would be very boring. When we pop on the indicator for Bitcoin, we're looking at the structural levels across more than 5,100 days of data. One thing that we've noticed right here and now is the 43,940 structural level has been very, very difficult for Bitcoin to get through. This is not the kind of news we want to see. This will throw negative momentum inside Solana, and that's what's happened recently. This negative momentum inside Solana is explained by the negative momentum inside Bitcoin and also rotation. From here, the question becomes, where could Bitcoin go next? And it's really quite straightforward. It's going to go to either structural support at this 42,466 mark or structural resistance at that 43,844 mark. We can see that we've got a series of tails that are higher than each other. This is confirming the stronger probability is to move up to these higher structural levels. But be aware that DXY is seriously overstretched. It has a lot of downward negative momentum, and it's filled one fresh air gap, one negative one. It's got one negative one below it as well. This is why when you look at Bitcoin, you can't just look at Bitcoin. You can't just look at Solana. You've literally got to go through the cheat sheet and see how the tier ones are lining up. Typically, when people first get into the market, and this is just very common, they will just look at the chart that they put money into. That makes all the sense and logic in the world, but that won't work for you because all charts are intercorrelated and interdependent. One thing that we notice here, Bitcoin has a massive amount of structural support underneath it. This is fantastic news. When we had this huge sell down in Bitcoin's price, we were actively leaning in here to accumulate because this is so strong. This is like a thermonuclear barrier, and it really helps price to do exactly what we saw, which was bounce up, and we would anticipate that. If Bitcoin's price comes down, we would expect Solana's price to come down as well as the entire crypto market, except the inverters. If we were looking at price action and we didn't have the structural indicator on, marking up all these thousands and thousands and thousands of days worth of data, we literally wouldn't know that there's substantial structural support in this area. We wouldn't know there was structural resistance coming through here, a couple of layers, and we wouldn't know what support exists under these areas. We would be flying blind. Many people buy Solana and Bitcoin in US dollars. That's why we need to look at the US dollar currency index. If the US dollar currency index is spiking down like this, it typically means that Bitcoin and Solana are increasing in value. But how do we know what the structure is? After all, we've got over 20,752 days worth of data in the DXY. Let's pop on the structural indicator. Now, what do we see here? We saw one support turning into resistance, and that resistance has been substantial. We also saw support through here, which fell, and the dreaded negative fresh air gap opened up and swallowed literally the DXY. Now we can see there's another negative fresh air gap in here. There's a lot of negative momentum on the DXY. That means the current probability, just from these charts as they stand at the moment, is for Bitcoin and Solana to go up. You must be aware of the rotation element occurring inside Solana. When looking at Solana's price history like this, of course we've just zoomed in on recent indicative price, but that's okay because we're putting the total structural support and structural resistance levels on Solana at the current time. If Solana manages to turn around and Bitcoin going up is a major issue in this, well, the success of Solana depends on Bitcoin going up. And you've seen that play out time and time again yourself. That's exactly why I showed it to you. One thing that we need to be aware of, we need to bypass this previous area of structural resistance at 123.23 and then overcome this structural resistance at 129.92. Now, when we do that, there's a very interesting thing that's happening. We've got a big positive fresh air gap, and it may not look like much, but it really is. That positive fresh air gap is literally a over 20% area where there is no resistance inside the market whatsoever. If Solana keeps on going up, it could really spike up, and this is something to be aware of. Where is the real resistance inside Solana's price action? It's right here at that 170 mark, and that is strong. That strong resistance right there could stop Solana dead in its tracks. When you have these CTKS method levels, these SLs, you literally have X-ray vision. Can you imagine saying something like that without the indicator? And you can learn the CTKS method yourself and mark up all your own charts. I strongly urge you to do that if you haven't done it already. The reason for that, if you know how to mark up your own charts, you realize how much work goes into these charts. But it's quite amazing. Most people will spend less time in what they're throwing, potentially their whole life savings into, rather than planning their holiday. So just bear that in mind. It's really good to do your research. Get every edge that you possibly can. One thing that I just want to pass through very quickly to you is this concept of percentages. When we look at a percentage, if we bought Solana here and it goes up to that 170 mark, just about there. If it goes up, look at the difference between percentages. This is 62.34%. That's 30.89. Why don't we just get the correct coordinate? That's 170.05, so that we're just comparing an apple to an apple. There we go. Look at that. It's double the profit. This is what's called getting onto the right side of the percentage, and you'll hear me talk about it again and again and again. You want to buy when things are going down, but you need to know the structure of what you're getting into. For example, if you were getting into something that was literally in a fresh air gap or just on the border of crossing into a negative fresh air gap, and you didn't have any structural support below, and that does happen, you'd be literally crazy to buy at that point because the probability of you getting whacked financially is very high. A lot of people say, Ken, I'm an investor, I'm not a trader. I don't need to learn where structural support and structural resistance levels are because I just buy around the top and then it retraces and I hold on for dear life for a long period of time and then it eventually will come back. That is certainly one way to do it, but probably a much more effective way is to know where the structural support and structural resistance levels are and dollar cost average in on levels of strong structural support. That is, place limit orders into the market and just chill because they'll fill whenever they fill. A lot of people say, I'll just dollar cost average in each day or each week or each something, each X days. That is a very ineffective DCA strategy. What you want to do is to know where the structural resistance and structural support levels are and just DCA according to them. And when you start to actually understand and read these particular levels, you will find that you get X-ray vision on the markets. Look at the difference between 62%, say 60% and 30%. That's a big, big difference. Profit is made where you buy. Potentially, another thing that's really good to look at is not buying. For example, if we look at Solana and just go to the tail, it's down a little over 19%. That's a lot. It was actually very likely that Solana was going to retrace, and this retracement is, of course, unpleasant if you're holding Solana, because you'd look at your money and say, my money just decreased by nearly 20%. I'm not happy. And this is the thing where trading comes in really handy. You can get into the market by buying at levels and layers down on structural support. A lot of people think the price will just get away from them. After all, it's done these huge candles. It's going to keep on doing them. But we know better, don't we? We know that this is a positive fresh air gap, and so is that. And as increasing structural resistance came into play, we anticipated this kind of pullback. Of course, we also assumed there would be some rotation. Now, what do I mean by that? If we look at Solana has been doing really, really well over the past week, and there are certain things that have not been doing so well over the past week. What typically happens when things get overextended, money flows out of those projects into other projects that have not done so well. That's why you need to keep your eye on overextension. Overextension causes rotation. I would urge you to always think in terms of percentages. Say that you bought right here. Let's just drag this guy over here. And you end up hitting that 170 mark, where we know there's so much structural overhead resistance playing through at that level. If you bought around this top and you just held on, you would make 34.58%. Not bad. But what if you bought down here? You would make even more, 66%. There's a very big difference between 34 and 66. But it literally only would take a couple of days to get. What typically happens, people see the price going up and up and up and up, and they FOMO. They've got fear of missing out. We do not have fear of missing out because we know where the structure is. If there's a lot of momentum and overhead structure where the sellers are coming in, of course the price is going to get pushed down, especially after such a big run-up due to rotation. Rotation simply means so many people think, wow, that's pretty good. I'm going to bank that and get into something else that's just about to take off. A lot of people think that you can only use SLs for trading. You don't have to use them just for trading. A lot of investors use the SLs all the time to understand where structure is being broken out from. And we saw that just around this particular 73 mark. When I was interviewed by James from Invest Answers, I talked about Solana, and James was saying, Ken, where do you think Solana would go? I said, we need to keep aware of this 1282 to 1462 level. There's a lot of structural support. There's a lot of structural resistance from 2898 to 3274. But the next level of structural resistance is all the way up from around 160. And what I was trying to explain to James at that time, because objective dynamic market structure changes month on month on month, we can see that it's raised up to 170. But the concept is there was literally a fresh air gap above this particular structural resistance area at that time. I said it's going to fly, and that's exactly what it did. Solana flew. These particular shaded areas are called SCs, or Stanfield zones. They're just accumulations of SLs. And this particular area was very, very strong. I showed you Bitcoin before. That's got a very strong structural support area, like Solana had down here in this area from 1282 to 1462. And we did see that Solana's price did come in and tap that and said, whoa, too many buyers, I'm out of here. And then it went straight up to tap the structural resistance level. What I said to James, if we get through that 32 mark, there's going to be fireworks. And we've been riding Solana pretty hard, pretty much all the way up. I just stopped a little bit below Solana's price just back here because I was satisfied with my profits from Solana. One thing that you don't need to ride everything to the absolute maximum point and the minimum point. You don't need to do that. And it really depends on your time horizon as well. It's vitally important to know the structural support and resistance levels. When you're looking at Solana, it will make all the difference in the world. But no matter what particular crypto you're into, it's very important to look at Bitcoin as well as total crypto market cap. If you don't know the structural support and resistance levels across the Tier 1, Tier 2, and Tier 3 charts, you'll end up guessing. I'd also suggest that you download the free CTKS timing cheat sheet. It's a fantastic aid to help you. You'll see patterns that you just can't unsee. When you realize how financial markets work, you will be better than CNBC. You'll be better than the Wall Street Journal or Reuters or Bloomberg's, because you'll be doing your own news reports. That means you will simply understand how things move in relationship to each other and what moves the market and what doesn't. When people first get into the markets, they've worked very hard for their money, so of course they just they demand a return. This is normal. Unfortunately, it's not the way the markets work. There's not certainty inside financial markets. There's probability and rules. A lot of people tend to go all in or all out, and they don't graduate in or graduate out. Therefore, Zones 1 and Zones 2 are the lose money rule zones, where scarcity is dominating a person's thought process. Zone 3 is where learning commences. Zone 4 is the bridge into positive excellence. Positive excellence makes you incredibly strong. And it also unlocks happiness and meaning within life. We always know that the price of anything is moving in a wave, and we control the trade or investment, but the market controls the return. Therefore, we focus on what could happen if the markets go down, go neutral, or go up. We have 3 simultaneous strategies playing out at all times. We are never caught off guard, and we always know what to do because we've made up our minds before time. We also keep a really positive attitude, one that's focused on abundance. Getting stuck in scarcity thinking will make you think in ways that just can't attract abundance. And talking of abundance, we're literally just scratching the surface of the CTKS method and how these SLs can assist you to understand where price is going. It's vitally important whether the market is going up parabolically or coming down parabolically to know where your safety nets and your ceilings are. They'll make all the difference in your profitability. Combine that with the cheat sheet and you're on turbo. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.